Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Phillips, CEO of Harvested Financial, to discuss strategy execution as a service and option strategies for retail clients and individual investors, as well as how volatility responded to the election. Mark, it's great to see you again. Welcome back to Trade Talks.
Yeah, thanks again, Jill, for having me. It's great to be here.
And Mark, let's talk about sector rotation. And of course, besides the election, the big topic has been technology versus value.
Absolutely. It feels like as soon as that election volatility came out, all everyone wanted to talk about was now this sector rotation. And I think we saw over the last couple days, and really it's only been the last couple days that we've seen this shift, is that there's been a little bit of gas taken out of the technology sector, which we model with the QQQs, which is also equated with a lot of the growth names, compared to some of the value type names that we tend to associate with the IWM index. So we're barely seeing some crosses here just over the last couple days. I think it was in the last day that the ratio of the two of those just touched its 200-day moving average. And so that's been a long time since they've crossed. So we're really only just seeing the very beginnings of this here, we think.
All right, now if we look at relative implied and historical volatility, what are some of the levels that you're taking a look at? And did you see what they call that vol crush following the election?
Yeah, absolutely. That vol crush, I think, was on everyone's radar. And actually, to kind of set the stage a little bit here in terms of how different these sectors have been over time, I did want to pull up a quick chart where I can show sort of just what kind of outperformance we've been talking about here. And, like I said, we model the value sector with IWM compared to the growth switcher Qs. The Qs have just been, over the last year, just been absolutely, dominating both the SPY here and the IWM. And this has been fueled by a lot of factors that I think is partly still election driven. I think there's partly an interest rate question here that people are thinking about when they're thinking about what's behind a lot of this QQQ growth and what's behind a lot of the allocation towards growth names. Low interest rates are a big part of that. And then I think there's also potential regulatory shifts that might happen post-election that are going to cause some reallocation here between the different sectors. So a lot of different factors here are really trying to come into play and have been building over the course of time. I guess I'll throw in a third factor with the pandemic and sort of the concentration of some of those stay-at-home trade names that are in the technology sector. That might be causing some of this very recent shift here, but against this long backdrop. So, to highlight, I guess, how recent this shift is, this is only just over the last couple days that we're looking here. To get to your volatility question, though, I promise I will answer that because we've got to set the backdrop. And the vol levels, I think you talked about with the election spiker here. So we're looking at a 30-day spike we're looking at 30-day implied volatility here with, in IWM, that big spike around November election, and just the total deflation. So it's a very similar look in QQQs, that the same kind of deflation is coming out of them also. So we're seeing vol come in both names, and you've got to play that differently. You've got to think about which way could this go. Are we going to see a continued deflation to some of these longer term low levels and break through, the floor that's been set for many ways over the last 9 months? Or do we have room to bounce back? I think there's still a lot of concern about what could happen to, the reopening and the vaccine. So really, we're in a kind of difficult environment, straddling, potentially a re-entry to low volatility, or persisting in this high volatility environment.
So, Mark, the question is, how do you stay exposed over time periods such as that?
Exactly, and I think we want to play it really market neutral here, is one of the terms we like to throw around at Harvested. And market neutral means that we're going to take a little bit of a position in the Qs that might be offset by something in IWM. So because we don't know which way things are going to go, we want to stay relatively hedged and lean into a little bit of the rotation. You can do that with call spreads versus put spreads in one. And doing that over time and systematically executing that trade means that, one day it might not happen. The market moves irrationally day over day, but by persistently staying exposed to short vol, perhaps in the Qs versus a longer vol trade in the IWM with that directional bent, allows the market to play out in a lot of different ways that could still remain profitable. So it's really about staying well risk managed and systematically exposed over time to take advantage of an ongoing rotation that we might be seeing here.
Right, and that's exactly what you guys do at Harvested Financial.
Right, a systematic execution. So options do really well in timing short-term events. But to capture that sort of event over time, you want to, trade a series of trades. That this isn't just one sort of event that we're going to say, boom, here's the right position. This is something that you want to, play out over time and see how week over week, month over month, this plays towards the end of the year and into the new administration. So we're not done with election news yet. I think this trade does still have time to play out.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks.
Yeah, thanks, Jill. Good to see you.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.